Will your Social Security benefits be reduced by the windfall elimination provision and or the government pension offset? That is the subject of this video. Hey, welcome back to the Financial Fast Lane. My name is Lane Martinson, and today we are talking about WEP, or the Windfall Elimination Provision, and GPO, which stands for Government Pension Offset. So these provisions will reduce Social Security benefits for certain people. These people are those that have what is called a non-covered pension. A non-covered pension is a government pension separate of Social Security. This applies to certain teachers, police officers, firefighters, and other federal and state employees, as well as some local municipalities. So if you have a non-covered pension, then neither you nor your employer paid into Social Security system while employed in that government job. The concept or the idea is that since you have a government pension, you will receive that instead of Social Security. Although we don't typically refer to Social Security as a pension, it's really what it is. So if you think about the name of WEP, Windfall Elimination Provision, it is based on the idea that it would be unfair to receive two government pensions. To receive two government pensions would be considered a windfall or an unfair advantage. And so the provision was put into place back in the 80s to eliminate the windfall of two pensions. It's common for government employees to change jobs and go from the public sector to the private sector, and to have a new employer that does participate in Social Security FICA taxes. An example would be police officers. It's not uncommon for them to work, say, 20 years and then retire from the police force and then start a second career in the private sector. When you have 40 credits or more of earnings history, which is at least 10 years of earnings, then you qualify for your own Social Security benefits. So this is where WEP and GPO come into play. The windfall elimination provision is a reduction in your personal Social Security benefits when you have a non-covered pension and you have qualified for Social Security benefits also. The government pension offset has to do with how the spousal benefit is treated. The GPO is a significant reduction and most often completely eliminates the spousal benefit, but not in every case. There are a lot of misunderstandings and a lot of errors around WEP and GPO. It is not uncommon for Social Security to start paying you your Social Security benefits without realizing that you also have a non-covered pension. They will eventually discover this error, and the additional money you received will be considered an overpayment, which they will require back. And this is typically done by reducing benefits for a period of time or skipping benefits until the deficit has been covered. So in the fine print of your Social Security statement, it states that if you've qualified for Social Security benefits, but you're part of a non-covered pension as well, then the estimated benefits on your Social Security statement are incorrect. And so you don't want to look at that and think that you're getting all that when maybe you're not. You've got to apply the windfall elimination provision. And so that calculation, how do we calculate these things? How do we calculate the reduction? Well, the windfall elimination provision calculation is rather complex. And I think if I really go into it, your eyes are just going to gloss over. But basically, you've got to understand the AMI. It stands for Average Indexed Monthly Earnings. You got to know how the bend points work in the calculations. And your earnings that qualify for Social Security benefits, they need to be what Social Security considers substantial earnings. And that's a dollar amount that changes over time, year by year. So you can go to the ssa.gov and certainly get more information about this. We like to make it easy. If you go to socialsecuritylane.com, for a nominal fee, we have professional analysis that we can create for you, do all this calculation, and really help you make a good decision. I think it's a very good value. Social Security you should not think of Social Security in your retirement planning as one separate thing. That's where you're going to leave hundreds of thousands of dollars on the table, quite literally. You want to optimize your retirement income plan, and that includes holistically coordinating and optimizing your strategies with Social Security strategies, which are significant, tax strategies, investment strategies, so that you have a peace of mind as you head into retirement. So I hope you found this beneficial. If you go to thefinancialfastlane.com, we have free downloads and other information. If you have not subscribed to our channel, hope you'll do that and like and share it with others. We really appreciate that. And I look forward to seeing you in the next episode of the Financial Fast Lane.